we realized that the market, where the sweet spot in the market should be, is in a lower cost EV.
Big one's going to be the Equinox, because that's the mass market priced EV that people are saying, okay, if you're going to compete in that market, this is where you have to show it, right?
There is definitely an EV adoption in the market.
But you don't see any risk of consumers staying with hybrids and saying that's good enough for me?
Full self-driving vehicle software. They're offering a month off for Tesla vehicle owners.
And listen, we have Tesla bulls who will come on the show, and they'll pound the table on autonomous driving.
All that and more. So let's get to it. Tesla stock remains up in the pre-market almost 1%, sitting at 179.07. Been a while since Tesla finished the day positive, more than likely from that 1 month free trial of FSD for all US vehicles. Because I have very little faith in the stock market's ability to understand what is actually happening, I placed a 185 put. But hey, I'll be happy to be proven wrong. Prove me wrong, stock market. Put Tesla where it deserves to be, or keep underestimating this incredible trillion-dollar opportunity.
Ford affirmed its full-year operating guidance for 2024. The motor giant still sees adjusted earnings of $10 billion to $12 billion and adjusted free cash flow between $6 to $7 billion. That is the same forecast provided in early February. Now, for more on the company's future and its plans for the EV market, I'm pleased to say we're joined now by John Lawler. He is Ford's Chief Financial Officer. Obviously, I'm sure you spend most of your days talking about EV demand specifically. It really hasn't grown to the magnitude that many expected. Of course, Ford has dialed back some of its EV investments. At what point might Ford just revisit the EV strategy and your investment schedule?
Well, I think it's a matter of not if, but when. So EVs are growing, and they're growing at a quick rate. It's just not as fast as the industry had anticipated.
I mean, it's so weird for me to hear Ford say that. If they were building compelling battery electric vehicles, it would be growing to what the industry expected. But they're not. Neither is GM, Stellantis, and anybody else not named Tesla. I mean, Tesla's #1 in the US when it comes to selling battery electric vehicles. Is a US legacy auto manufacturer even second?
So we're adjusting appropriately to that. We're adjusting our capacity to meet that demand. We've seen significant price reductions, so we're working on our business fundamentals to improve those as well. But I think the important thing is EVs are coming, and they will be part of the transition. The other thing that I think is very important for consumers is to understand that hybrids and plug-in hybrids are also a solution that we offer.
Not a solution, a stepping stone. The hybrid model is only there for insecurity purposes. Will this meet the demand of me going on a family vacation every week? We all know people aren't going to be driving super long distances on a daily basis. But that doesn't stop the interlock in our brain from thinking, oh no, we don't have enough. Just recently down the block, I saw a beautiful red Model Y. Brand spanking new. The look on a new Tesla customer's face while they're driving their vehicle is priceless. And just yesterday, in that same driveway, I saw a brand spanking new blue Tesla Model 3. This household went from no EVs, 2 internal combustion engines, to 1 EV, a Tesla, and 1 internal combustion engine. And then in a matter of weeks, went from 2 EVs to Teslas. And unless I miss my guess, they skipped entirely over the hybrid model. Now that's not going to be for everybody. I too bought a hybrid back in 2016. There is a place for hybrids. Just know it is the stepping stone.
I definitely want to get to hybrids because I see a lot more of them on the road, and it seems like a lot of people are going to that alternative. But let's talk about cost here. I mean, anecdotally, it feels like most people say EVs cost more. We're in a high inflationary period right now. How are you responding to that? Of course, Bloomberg has reported that you're developing a $25,000 compact EV. Can you share more about that?
Well, about 2 years ago now, we realized that the market, where the sweet spot in the market should be, is in a lower cost EV. And so we started what we call our Skunk Works group, which is a group of really highly qualified EV designers and engineers. We have them out in California, and they're designing a low-cost platform for us so that we can hit what we see as the key market, consumer market for EVs. And that is going to be an approach of having an affordable, low-cost solution for consumers. And so I think as vehicles like that come into market, you'll start to see that demand increase and then the scaling of the EVs increase across the industry.
He ain't lying about that, but let's just hope this Skunkworks group is able to make this compact EV affordable for Ford. Your best bet is to get your cheap EV out there way ahead of Tesla. Sell as many of those things as you can. I suppose second fiddle is better than no fiddle.
Bank of America's Global Auto Summit is today. Is that today? Where the focus will be on hybrids, EVs, and more. Our next guest is one of the key attendees, and he joins our own Phil LeBeau right now. Hey, Phil.
Hey, Joe, and we have a chance to talk with Paul Jacobson, CFO of General Motors. Before you go over to the Bank of America conference, let me ask you, what's your perspective in terms of when you look at the market right now, especially March sales, best we've seen since before the chip crisis?
We're really excited about that, how the year has started. I mean, you know, if you look back at some of the conferences, we had a little bit of a choppiness in January, kind of attributed that to some of the weather that we'd seen across the country. February came back really strong, and March is looking really strong as well for us.
The industry incentives have gone up, but your incentives have not. What's the dynamic there in terms of what the consumer is looking for and what the industry needs to do right now?
So our incentives went up a little bit as we began the year, but that was what we called the Ultium Promise. So if you recall, we had a number of vehicles that we produced that weren't eligible for the IRA tax credit for customers. And we stood up for our customers and said, we're going to give you that $7,500, even though this small group of vehicles doesn't apply. So we saw incentives tick up a little bit. We've actually seen them come back down.
Because they now qualify.
Because we're now producing vehicles that are qualifying as we work those other ones through the system.
I like what I'm hearing, GM. Make sure your loyal customers to your brand feel appreciated. One of my neighbors has the Cadillac Lyriq. It looks nice. I just couldn't possibly do it for myself. Just like I'm sure those Samsung phones are nice, but I'd rather have an iPhone 10 than a new Samsung phone. I don't know why. I just know it's true. My point is, once you've experienced the Tesla software, the functionality of the app, all of the ecosystem working in concert, I can't go anywhere else. But the car's nice, and I'm glad she's part of the EV family. Whatever you gotta do, GM, to keep those customers loyal to you.
Speaking of EVs and the Ultium production, where are you in terms of the ramp up in both battery cells, battery packs, as well as EVs?
So we're actually making really good progress on that. We're in the early days, as we've said, of accelerating up. We've seen a couple of records for Lyriq, which is selling really, really well. It's our number 2 selling Cadillac already from that standpoint. And as we continue to work on that production, we're well on track for that 200 to 300,000 EVs this year.
The big one's going to be the Equinox, because that's the mass market priced EV that people are saying, okay, if you're going to compete in that market, this is where you have to show it, right?
Yeah, so it'll be the most affordable EV out there with more than 300 miles of range, and we're really excited about it.
And when does that start to hit the retail market?
We expect that to come in the second quarter from that standpoint. So as we work through the last minute production issues, we expect to come very, very soon with that product.
Get it out as soon as you possibly can. Again, second fiddle is better than no fiddle.
Hybrids have become red hot, and I know Mary mentioned in the last earnings call that you guys were going to start developing the plug-in hybrid Silverado. How quickly will you be able to get those to markets?
So what we're doing is we're trying to make sure that as we navigate the path to an all-electric future and complying with the government standards, that we're meeting the customer where they are. And what we've seen with plug-in hybrids is customer response picking up for that as a solution to help bridge between ICE and EV. So we're working on that. Will be more information to come on when that's coming.
But you're behind the 8 ball in that area right now, right?
Yeah, but we're adjusting to where the customer is, I would say, because we have been really focused on the platform solution. That's where most of our capital has gone. That's helping us to ramp up EVs and make sure that we can meet the customer across a wide wide portfolio of options at the high end and at the affordable end as well. So we're making progress.
I actually like what I'm hearing there. You don't want to miss out on making money on the stepping stone. Although Ford, Toyota, they have this huge advantage when it comes to hybrid. And if you can sell some plug-in hybrid trucks along the way, by all means. But your key focus should be on this Ultium platform. Because in 10 years, the stepping stone's not gonna matter. It will be how you create battery electric vehicles and whether or not you can retain customers of that Cadillac Lyriq, that electric Equinox, and so on and so forth. It sounds good. Well, let's see if they can execute.
And so you are now officially the #2 largest seller of EVs in the U.S. behind Tesla.
That is right. That is right. And continue to close the gap. Sales are going well. And we are expecting to open a new factory very soon this year.
We just heard from the legacy auto manufacturer, and now we're hearing from a foreign auto manufacturer in Hyundai. If you allow BYD and some of those Chinese EV startups to sell their vehicles here in the United States, I have no doubt that our legacy US auto manufacturers would be outmatched in every single way. They can't even compete with Hyundai.
So you're going all in at a time when investors are wondering if there's some EV fatigue.
Yeah.
What are you seeing from demand?
Well, we continue to see that the EV demand continues to grow. A lot of discussion about the pace of growth. But in our case, we double sales of EV last year. This year, we are selling about double what the industry is selling in terms of growth. And if you combine it with the plug-in hybrids, even more. So things are going well for us. As mentioned, we have become #2 in sales of EV. We're global third OEM as a group. And then we are about to start producing EVs in Savannah, Georgia, starting in October this year, 3 months ahead of schedule.
Is that because of the Inflation Reduction Act?
Well, that's one of the reasons, not the only one, but definitely we are waiting for the October sales to help us qualify. So far, our vehicles don't qualify, other than during in the lease segment, and then hopefully, once we start producing locally, we'll be able to get the full qualification, $7,500, which we're planning to pass on to the customers.
Expect more foreign auto manufacturers to build their factories, Georgia, South Carolina, North Carolina, hell, Texas. At around 10% EV penetration, the US market is ripe for transition. And if our US legacy auto manufacturers aren't up to speed, these foreign auto manufacturers will step right in.
There's been a lot of, among the analyst community, mea culpas saying we underestimated the role that hybrids would play as a bridge to this new adoption cycle. Can you talk about where you see hybrids fitting in right now?
Well, definitely, I think the way we see it, we see a very clear path to electrification, right? And then what we see is that a number of customers, they're jumping right into it. Others, they are hearing about it, but they prefer to go into maybe plug-in hybrid or hybrid. And this is why in our case, we are saying we want to be flexible. We want to offer all type of motorizations. And in, for example, our most popular Tucson that we're launching a new facelift tomorrow in the New York show, we're launching it with ICE version, hybrid, and also plug-in hybrid. But again, we see the biggest growth on EV. So I think the only thing that is happening in the market is that it's taking a little bit longer, the adoption, but there is definitely an EV adoption in the market.
But you don't see any risk of consumers staying with hybrids and saying that's good enough for me?
No, that's 2 powertrains. The only reason why hybrids exist is because the battery electric vehicle technology was not there yet. Needless to say, battery electric vehicles have reached a point where hybrids are unnecessary. 1 powertrain with very little maintenance compared to 2 powertrains? More expensive, more maintenance? The only utility hybrids serve now is to be a stepping stone into the pure electrification.
Look at the commentary on Tesla from an analyst at Bernstein. It says after a bull yesterday dropped their own conviction, but a lot of these price targets are still generally remaining
elevated. What's the situation with this one, Renita?
Well, right now, this analyst over at Bernstein cut the price target to $120 a share from $150 and kept it at an underperform rating. This analyst also reduced the first quarter forecast to about 426,000 units. That comes down from 490,000 units and brought down the fiscal 24 estimate to 1.98 million, down from 2.12 million. And this analyst just talks about all of the demand issues that Tesla's been having lately and really the entire EV sector. It's something that we cannot ignore. The analyst is merely just now bringing down estimates to reflect that right now. But this analyst said Tesla's share price still remains high on almost every valuation metric compared to both traditional and higher growth automakers.
As it should.
And it also still looks pretty expensive relative to its slower growth that's been happening and the slower growth expectations for this stock at the moment. Meanwhile, we see shares actually rising. That's because Tesla is offering 1 month free of its autonomous, what do we call it? It's the self-driving vehicle software.
Before we move on, what are the odds that Renita Young, our analyst here, has never experienced FSD? Either way, it would appear that our analysts aren't really comfortable or familiar with the software that Tesla provides, not truly understanding the intricacies between Waymo, Cruise, Tesla, Auto Steer, whatever the it's just cruise control, right? They're offering 1 month free of something mundane as cruise control? This is why I have very little faith that the stock market truly understands what's happening here. And I intend to take full advantage of that by buying as much TSLA as I possibly can.
Full self-driving vehicle software. They're offering a month off for Tesla vehicle owners, and it's just going to be a month for free. If you want to buy the service, it'll run you $12,000 for a one-time fee or $199 a month.
In my opinion, this is a bargain. Imagine, for $12,000, once they perfect this software, which about a year ago I would have been skeptical. I'm curious to how this might work, but as of right now, I'm fully confident that they're going to figure out a way to monetize this software.
Okay, well, it's definitely going to be a big selling point for them as the technology advances, so try and get as many people hooked as they can.
Yeah, and as a matter of fact, so it already has about 400,000 full self-driving. I keep getting tripped up on that full self-driving FSD customers that it has, that $199 per month. That'll make FSD on its own a billion-dollar company. So there's
Shares of Tesla getting a boost in today's trade after CEO Elon Musk announced the company will offer a free trial of its driver assist tech to U.S. customers. Now, if you'll recall, Josh, this is the very technology that was part of the recall when you think about it. So, look, Tesla.
Holy smoke! Look at Yahoo using this Dawn Project propaganda about the dangers of full self-driving. Our friends over here at Yahoo Finance obviously have some skepticism about FSD.
Look, Tesla is in a very competitive space right now. They're also sort of really trying to compete at a time when customers are saying we don't necessarily want to shell out a lot of money for EVs because that first wave adoption has already happened. They are trying to provide these incentives. The question is that really what's keeping drivers away from Teslas if in fact they're not buying into it? You have to wonder, the cost calculation is still a really big one.
The #1 selling battery electric vehicle of 2023 was the Model Y, despite it costing damn near double of the #2 slot. Incentives, no incentives, people are going to buy Tesla vehicles. The trial for FSD is to get Tesla consumers who probably didn't buy the car for that reason at all a chance to experience the software for themselves. I mean, it is freaking smooth right now. And for $199 a month, this is probably lower than your streaming services bills aggregate over the month. And even as a driver assist feature, this takes a load off of the driving experience. It makes things so much easier. Definitely worth $200 per month. Any Teslas that I purchase from here on out will include that $12,000 software.
Yeah. Well, it is interesting, Kiko. Some, hear Musk, and listen, we have Tesla bulls who will come on the show, and they'll pound the table on autonomous driving.
Don't say they didn't warn you. Don't say that I didn't warn you.
And you know that it's always one of their kind of like foundational arguments, why they're in the stock, why they kind of sort of justify the valuation,
Why
even
it's a
though,
tech
as you
company,
know,
yeah.
for sure recalls and also regulators, of course, carefully scrutinizing the software too.
Yeah, I mean, you have to wonder, is this something that Tesla wants to tout at this moment, given what has played out on the regulation side of things?
Yeah.
But
including, by the way, a high-profile trial about to start too, involving a crash with the software.
These analysts, they talk about it, they haven't even experienced it, not understanding the progression, let alone the differences between autopilot and FSD. But I suppose that's why I'm here, for clarification. In conclusion, we hear from Ford, GM, Hyundai about the EV growth, the startling demand of hybrids, and where they see the future going. Bernstein has dropped Tesla's fair value estimate to $120, citing soft demand. Instead of the stock falling on such news, it popped. Maybe because every US Tesla is going to be offered a free trial of FSD. US consumers are going to get 1 month to experience FSD. That's basically a free $200 from Tesla. Those of us with FSD know that this is an incredible technology, and if people just experience it, have the burden of driving alleviated for the brief moments during traffic, many of those consumers that experienced a free trial probably won't be able to go back. That's all I got for you today. Be easy.